morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a positive start after a rebound in American manufacturing spurred equity markets on Wall Street. After a successful first attempt last month, the Reserve Bank of India will conduct another forex swap auction to manage liquidity in the system. The auction will be held on the 23rd of April. The Supreme Court will today announce its verdict on the RBI's February 12 circular regarding restructuring of debt. Former Ashok Leyland CEO Vinod Dasari has been appointed the CEO and whole-time director of two-wheeler manufacturer Royal Enfield for a period of 5 years. Dasari, remember, had quit Ashok Leyland last year to pursue what he called other interests. And the Serious Fraud Investigation Office, or SFIO, has arrested former IL&FS Vice Chairman Hari Sankaran for alleged fraudulent conduct and causing wrongful loss to the company and its creditors. Let's talk about the action on Wall Street first. Stocks ended higher after a gauge of manufacturing activity in the US rebounded from its 2016 low. The Dow Jones registered its highest closing level since October last year. Renita Young of Bloomberg News tells you everything that happened in that session in this report.
U.S. equities are higher with key data from the U.S. and China easing concerns over slowing global growth. Later on this week, we will have U.S.-China trade talks resuming as well. Now, within the movers, we saw Lyft shares plunge as much as 21%. One session after the company had its initial public offering, shares fell below the IPO price, and analysts are saying that this is a test case for ride-hailing app, which is the #1 ride-hailing app, Uber, coming out with its IPO very soon, as well as other startup companies like Pinterest and Postmates. We saw Apple cut the price of some of its iPhones in China, as well as Kellogg selling its snack businesses to Ferrero for $1.3 billion in an all-cash transaction that's supposed to close by the end of July. Across the asset board, we saw key China manufacturing PMIs for March reach the highest or beat the highest estimates of Bloomberg economists, as well as a gauge of U.S. factories topping analyst estimates in March, making treasuries extend losses. The U.S. dollar fell versus major currency competitors, and the Bloomberg Dollar Index ended a little bit lower as well. And that's a look at your Monday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, so it's panning out how we had anticipated at the start of yesterday's session. Let's take a look at how the Asian markets are faring at this juncture. Well, Rosalind Chin is joining us live from the Bloomberg studios in Hong Kong. Well, Rosalind, yesterday we were talking about some data points that have come in that suggested that all the gloom and doom scenarios were perhaps a little overblown. That's panning out, and it's looking positive this morning as well.
You're right, it is. We've got the MSCI Asia Pacific Index making gains for a third session, up by 0.29% right now. And it is the data points which is driving this sense of optimism in the markets. We had some stronger than expected US data on manufacturing as well. And that on top of the Chinese data that we had previously, of course, helping fuel some of this rally in the markets that we're seeing right now. So we do see that the Nikkei is up about nearly 0.5%. Topic's up a little bit less than that, up just under 1/5% right now. Yen, we're seeing a little bit touch weaker. Of course, that is as investors look to come out of havens and look for slightly riskier assets there. Now, in China, which of course just opened a few moments ago, again making gains there. The Shanghai Composite up by about 0.25%, but the CSI 300 index only up by about 0.1%. Still a little bit of convincing to do on that particular front. Hang Seng up by 0.4% at the moment. We want to look at Australia, of course, because the RBA is going to be making its monetary policy decision later today, and that it's expected to hold the benchmark rate at 1.5%. We've also got hours after that the election budget being released by the government, and of course this comes, well, we're calling it the election budget. It's the Australian budget coming ahead of elections, and of course we're expecting the government to give away some sort of sweeteners to help convince the electorate that, of course, it should stay in power for a third term, although that is looking unlikely now. So the Prime Minister Scott Morrison's coalition's earmarked more than $6 billion US dollars, that is, in giveaways as part of its budget. That much we know. The rest will be revealed later. So right now the S&P ASX 200 index making gains of more than 0.5%. The Aussie dollar fairly steady, of course, ahead of that RBA meeting. And finally, quick look at the New Zealand dollar, because that slid after New Zealand first quarter business confidence fell to -29 from -17 in the fourth quarter. So not so great there for New Zealand. However, that may change as global growth fears, of course, start easing, and we might start seeing more stabilization in the global economy. Back to you.
Thanks so much for that, Rosalind. Well, just days before the US and China meet to hash out an agreement on trade, the European Union has criticized China over unfair trade practices. Enda Karan of Bloomberg News brings you all the details in this report.
I mean, they're pretty minor concessions on the Chinese part. The finance ministry said it was all about creating a good atmosphere. And I think really, if you step back, it's just China trying to keep momentum going, putting these kind of olive branches on the table. I mean, the older tariffs on imported cars was a fairly minor issue in the first instance. But obviously, putting the ban on the synthetic opioid goes to a particular request from President Trump, given the opioid crisis in the US. So clearly, China sees these as goodwill gestures. But as you said, we had the commentary from the White House last week, Larry Kudlow saying it could take weeks, it could take months. Obviously, progress is being made, but whether or not both sides are at a point yet where they really have ironed out all of these big structural issues and the big concerns that the US has over China's state-sponsored industrial strategy remains to be seen. And I think that's why it will be crucial to see how Vice Premier Liu's talks go in Washington this week, and if the momentum continues out of those talks.
In the meantime, we are seeing the Europeans stepping up their criticism of China. Really, they're having a hard time seeing eye to eye on how to deal with Beijing.
Yeah, I thought these were very interesting comments, actually, especially coming in the week after China's President Xi Jinping, of course, did that European tour and signed off Italy into the Belt and Road Initiative with much fanfare. And we had these comments from Mr. Juncker making the point that Chinese investments in the EU complicates EU foreign policy and how they respond and deal with China. And he also made the point that Chinese companies are allowed to, roam freely within the EU, but European companies don't get the same reciprocity within China. So obviously that would be music to the ears of trade hawks in Washington. One of the complaints people have had about the US strategy is that rather than build an alliance with fellow governments who are concerned about China's trading practices, the US took a fairly unilateral approach. So I think the EU's comments will certainly be noted in Washington, and it will be interesting going forward to see whether or not some kind of a broader alliance does come of these comments, or whether the US continues to go their own way in dealing with China and the EU continues to go their own way in dealing with China.
Speaking about the EU, well, rejection seems to have become the new synonym for Brexit. The House of Commons in the UK has rejected all 4 alternatives for the country to leave the European Union on the 12th of April. Rami Inocencio has more.
The idea is that possibly she might put this towards a 4th vote as early as Wednesday, but with the fact that you just mentioned that she's lost it for 3 times in a row, some aides, at least one aide that Bloomberg has spoken to, has said that she might not actually do that. But let's go through what has actually happened here with all these rejections that you talk about. Let's go and pull this up on the screen and show our viewers here. Basically, the 4 votes that we had earlier today, every single one rejected. The customs union, which was the most popular option just last week, 6 votes short then, was just 4 votes shy of a majority this time around. The Common Market 2.0, kind of Norway Plus we've been talking about, was 22 votes shy. The referendum on a Brexit deal, this would allow the people to weigh in on something, whatever Parliament decided, also rejected there, 13 votes shy of a majority. And then there's an emergency brake on a no deal. This is a little bit complicated, but just suffice to say that it's an amendment in Parliament that was 101 short there. With that said, all of these did get more votes than Theresa May's deal. So the fact that we're getting very, very close to some kind of consensus here over those few votes that we saw that were shy, it begs a question on whether this might happen again with at least some vote getting over the finish line here. But take a look at what's been happening with the British pound, because we saw over the course of the U.S. trading day the optimism there with the British pound rising, and then right after that Parliament vote coming out against all 4 Brexit options. We saw it fall in our second trading day here. So this is where we stand in terms of where we are. I guess, Sherry, you put it best when you said chaos here and a brand new kind of chaos.
All right, when we're talking about the markets, it's a brilliant springboard for the Indian markets, which, by the way, the Sensex at least hit a lifetime high yesterday. Agam Vakil is here to tell you all about the day's trade and all that's happening in the futures and options space. Morning, Agam. Well, the best possible springboard, green across the board in Asia, but from what I see, the SGX Nifty has given up some of the gains that it had earlier.
Yeah, and it's a little bit of a concern, which, investors out there are waiting on the Nifty specifically to hit that lifetime high, and that is something that we're going to have to wait and watch out for whether or not it happens. But considering we have seen the SGX Nifty give up some of their gains, the real question is, can we expect the investors to wait a little longer for that? But for now, we saw advances of 0.5% for the Nifty, while the mid cap and the small cap indices advancing further and outperforming the benchmarks, with the Nifty PSU Banking Index standing out. But just in the last half an hour of trade yesterday, we started to see a little bit of weakness coming through for the private sector banks. So watch out for that. But if you keep that aside, in terms of your ADRs, we've seen gains in Tata Motors. Water Run Tata Motors has seen up 10%, and Vedanta, Wipro and Infosys all advancing in trade, continuing to show traction. Well, marginal weakness for HDFC Bank and ICICI Bank remains unchanged. But let's move on and talk about your flows. And once again, we've seen a resumption in the FII buying, this time of around 900 crores. DIs sell worth 1,000 crores. But in terms of contribution, we're seeing Reliance Industries, Infosys, L&T and TCS all advancing in trades, giving that support that the Nifty requires. But as you can see, the reason behind the Nifty bank falling is because of Axis Bank, IndusInd Bank, HDFC Bank and ICICI Bank. All the private sector banks actually bearing down not only the banking index but also the Nifty. Watch out for these names as we move into trade today. But in terms of futures and options, a little bit of unwinding coming through, specifically in the last 1 hour of trade, where we did see the Nifty come off to a certain extent. About 3% decline there in open interest. It's the same for the Nifty banking futures too, but this index closed in the red. So we saw a little bit of longs unwinding coming. And moving on to your open interest distribution, well, some very interesting moves coming here, and a lot of traders now are expecting the Nifty to move even further from current market levels. And the reason behind this is because we are seeing so much writing around the 12,000 mark. The 12,000 call specifically has starting and resumed a lot of activity. And that's what I'm talking about. It is essentially the 12,000 call which has seen the most amount of writing yesterday. So watch out for that level. Of course, a matter of concern is that the India VIX has also risen considerably, now back above the mark of 18. So keep an eye on your option premiums as well. They are fairly elevated at this point in time. And the Nifty put call ratio, though, remains largely unchanged. Not too much to speak for here at 1.48. And moving on to your stocks in band, well, Adani Power, IDBI Bank and R Power. No big changes here. But moving on to your other stocks, we have Escorts. We keep an eye on that one. Excite, Cipla, Balkrishna Industries, all of them seeing a lot of traction, even though we didn't see too much change in their underlying. And Torrent Power, Dish TV and BEML among others that we are keeping an eye on. On the whole, it's turned out to be a fairly mixed year of trade, Alex, but the underlying current still remains positive.
All right. Thanks so much for that, Agam. Well, let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Former Malaysian leader Najib Razaki is dismissing allegations he missed tax payments. That's following reports from Kuala Lumpur. The Malaysian newspaper The Edge says he was given an extra tax bill of $368 million for the period of 2011 to 2017. Writing on Facebook, Najib said he paid personal taxes every year and labeled the report as, quote, propaganda. His 1MDB corruption trial opens tomorrow. He is denying any wrongdoing. On to the EU now. EU governments are said to be struggling to reach consensus on a mandate for trade talks with the U.S. That threatens a delay that may further irritate Washington after the bloc already refused to include agriculture in the discussions. Now, EU ambassadors meet in Brussels Wednesday, and we're told that France is expected to push back at giving the green light to eliminating industrial tariffs. U.S. aviation regulators say a fix for the grounded Boeing 737 MAX jet is unlikely to win swift approval. The safety system linked to 2 fatal crashes since October is being reworked by Boeing to make it less aggressive and less likely to malfunction. It was due to be shown to the FAA last week, but the schedule has been pushed back, and the agency now says Boeing needs more time to carry out additional work. India has taken another giant leap in its space program, sending up 29 satellites in a rocket launch that's the first of its kind for the country's space agency. The largest satellite is a 400-kilo unit that will carry out a range of electromagnetic experiments, while it is in orbit. The rest include 24 satellites from the U.S. and others from Lithuania, Spain, and Switzerland. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's talk about the RBI now. The RBI, buoyed by the response it received in last month's forex swap, has decided to conduct another one in April. This is essentially a liquidity management tool. This time, too, it's going to be for $5 billion. Ira Duggal gives you the analysis of why the RBI prefers this move and what it means for the markets.
Surprise, surprise, within a week of the Reserve Bank of India concluding its first forex swap for liquidity successfully, they've announced another one. We'll talk about the implications or the potential implications of that in a minute, but the news first. The Reserve Bank of India has said that they will infuse another $5 billion in liquidity at the end of April. 23rd of April will be the auction that will be conducted, similar to the previous one. This will be a swap auction where market participants will bid to pay a premium to the Reserve Bank of India, and the Reserve Bank of India will announce a cutoff. Based on that cutoff, they will accept bids. Now, the last auction, which happened just last week, actually was very successful. They managed to get bids of about $16 billion, and then they accepted $5 billion of that and infused about 35,000 crore in liquidity. Now, there is different context to what happened last week in the first auction and what will happen in the second auction. Now, remember, the first auction has come at a time when there were tight liquidity conditions. You were moving into the end of the financial year, so the RBI would have needed to infuse liquidity in any case, because year-end, financial year-end typically sees tight liquidity, and you'd already done a large amount of open market operations. So there was concern that you were just distorting the bond market by buying out government bonds. So this was a new route to try. Let's do forex swaps. There's enough interest in terms of foreign dollars coming into the country. Swap those dollars for a 3-year tenor and put in rupee liquidity. So that was all in the context of a tight liquidity situation. Now you come to April end. Now, the beginning of the financial year typically sees money flow back in the form of government spending, and you do see easier liquidity conditions. So everyone was more or less anticipating that by the time you get around to May, liquidity conditions will be fairly comfortable. They may not be surplus, they may be neutral to mild deficit. So the question is, why is the RBI choosing to do this particular auction at the end of April? There could be two explanations. One could be linked to elections, because typically the currency leakage, the cash in circulation ahead of elections does pick up, and that has a consequent impact on liquidity in the system. So maybe the RBI is anticipating some of that, and they want to pump in the liquidity that may be required in the lead-in to April, May, when the elections actually peak. Or they could actually be moving their stance into one of slightly easier liquidity. Let me explain that. Remember, we saw a rate cut from the Reserve Bank of India in February. The expectation is that in April you'll see another rate cut, but the RBI has maintained liquidity in a significant amount of deficit, which means that the rate cuts have actually not passed through through. Bond yields are flat to slightly higher, and bank rates are actually slightly higher compared to where they were at the time of the rate cut. So there's been a lot of criticism that the RBI is making a mistake that it did in 2015-16, where it went through a rate cutting cycle with tight liquidity, and the end result was that those rate cuts didn't actually transmit into the economy. So maybe the RBI is responsive to that criticism and is starting to move towards an slightly easier liquidity stance. They haven't articulated it yet. Maybe they will articulate it this Thursday when the MPC actually meets. But if you read between the lines, it certainly looks like that tight-fisted approach towards liquidity has eased off to some extent.
Well, the judgment is likely to come around 10:30 in front of a bench, and it will be pronounced by a bench headed by Justice Rohinton Nariman and Vineet Saran. The judgment was reserved last month after hearing parties from both sides. Now, in this particular case, the petitioners have had mainly the arguments that they've relied on is that the RBI circular is a one for all and an arrangement that does not take into account the specific problems of each sector that it seeks to address. There are mainly three type of companies which have come in front of the Supreme Court. It involves power companies, sugar companies, and shipping companies. The second argument that the petitioner had taken is that the Feb 12 RBI circular also runs contrary to existing laws such as the Banking Regulations Act as well as the Insolvency and Bankruptcy Code Act. So, and the RBI, of course, on their side had rejected all these arguments and had argued for the constitutional validity of the Feb 12 RBI circular.
Well, hotel sharing startup Airbnb is putting undisclosed amount in India's largest hospitality chain, Oyo. Now, according to a person privy to the development, Airbnb is putting in close to about $150 to $200 million in India's largest hospitality chain. Now, as part of the agreement between Oyo and Airbnb, the inventory of Oyo will also be available on Airbnb's platform, and the talks are going on for a more broader collaboration between both the hospitality chain companies. Now, this deal with investment in Oyo comes just weeks after Airbnb made its largest acquisition till date, with this acquisition in last-minute hotel booking startup Hotel Tonight. Now, this deal in Oyo, which accounts for also the largest inventory of hotels in the country, also comes closer to the heels of Airbnb's IPO plan.
There are a number of stocks we're looking at today. ThyssenKrupp and Tata Reddy will sell assets to get approval for an EU merger, reported by a German newspaper. Both companies have filed a list of assets they're ready to divest in to get approval for the planned European steel activity merger. The companies are also ready to sell packaging steel assets, including plants in Belgium and UK, to offer customers access to raw steel production. Then there's Q4 FY19 update on Goodrich Properties. The company says it has achieved its highest ever bookings after the company sold over 2,900 homes with a total area of 3.75 million square feet, and the booking value was in excess of 2,100 crore rupees. The company also stated in its press release that this record performance was achieved through launches of new projects combined with strong sales of existing inventory. Then we have Eicher Motors. Vinod Dasari joins as CEO of Royal Enfield. Siddharth Lal will continue to be the managing director of the company. Prior to joining Royal Enfield, Dasari was the CEO and MD of Ashok Leyland since 2011. Then we have the Q4 FY19 update on Cyient. The company expects material decline in design-led manufacturing revenue as a large order delivery of $5 million has been delayed due to delay in regulatory clearances at customer end. For the services segment, there was deferment of orders by key customers in A&D and communications business units. There was a marginal growth of 1 to 2%. A marginal growth of 1 to 2% is expected. The operating margin outlook for financial year 2019 remains the same. Cipla's US arm signs a definitive agreement for investment of $22 million for asset co-development and licensing opportunity for pulmazole drug with Pulmatrix. This agreement is contingent upon Pulmatrix raising additional funds from the market. We also have Welspun Corp. A 100 crore rupees commercial tax order has been set aside by tax authorities. The said order was made in respect of manufacturing unit of Gujarat's manufacturing plant. And lastly, we have Coal India. The company reaches 600 million tons mark for the first time in production and offtake for 2018 and 19. The March production was up 9.6% at 79.2 million tons versus 72.3 million tons. The offtake was up 7.8% at 59.6 million tons versus 55.3 million tons on a year-on-year basis.
On the big brokerage calls for the day, first we have is Macquarie on Endurance Technologies. Now, the brokerage has initiated coverage on the stock with an outperform rating and a target price of 1,400 rupees. Now, it says that the company will be the key beneficiary of safety regulations and premiumization. Along with this, new customers and rising content per vehicle will also drive the growth outperformance for the company despite a slowdown expected in two-wheeler sales in India. Now, the brokerage is expecting the company's EPS to grow at a compounded annual growth rate of 23% over FY19 to FY21, and it is expecting its return on capital employed to improve to 31% by FY20. Now, on the back of the strong earnings growth and high return on capital employed, it says that the company deserves a premium valuation. The second note we have is on Persistent System, where Citi has downgraded the rating on the stock to sell on concerns of sustainable profit growth, but also expects the company to deliver a slower growth versus its peer, but also expecting the company's margin to be lower compared to its peers due to weak growth, supply side challenges and rupee appreciation. On its business, it says that the IP business performance has continued to disappoint so far, and despite an early start in the digital segment, its smaller size is one of the biggest investor concerns on the company. Lastly, it has cut its EPS estimate on Persistent System by nearly 3% and lower its valuation multiple on slower digital growth.
Thanks so much for that. Well, there's a lot more just like that on the website bloombergquint.com. In fact, over the course of the day, you'll find all the live market action and all the breaking news. So do check the website bloombergquint.com over the course of the day. As of now, you'll find a couple of stories that you should consider reading. First up, in good news for the government, goods and services tax collection for February rose to the highest level since the nationwide tax was rolled out in July 2017. The amount was higher by about 9.5% sequentially and 15.6% compared with the same period last year, and it stood at 1.06 lakh crore. Now, State Bank of India has moved the Supreme Court challenging the National Company Law Appellate Tribunal's suggestion to give more money to Standard Chartered Bank in SR Steel's insolvency case. In this case, Standard Chartered is an operational creditor, remember, and as such falls below the other banks in the pecking order under the insolvency process. That's all you need to know going into trade today, but do stay tuned. Like I said, there's a lot more coming up over the course of the day. This is Bloomberg Quint.